Hello BTC Dana traders. For this week we are going to be looking at the US oil because there is something quite interesting happening around the $86 area. Let us start from the 4 hours time frame. Since the beginning of August, price has continued to produce a series of higher highs and higher lows. And when we connect these higher lows, we have an ascending trend line that has gradually supported price action higher. So for the past 3 weeks, buyers have clearly maintained the stronger position, eventually pushing price towards this new high around the 87.65. But look closely at what happened before price got there. For most of the past 3 weeks, $86 area repeatedly stood in the way of buyers. We saw several attempts to move beyond this area, but sellers kept responding at every point in time. Then, last week something changed. Buyers finally pushed through $86 and extended towards 87.65. And the wider market was supporting that move. Oil gained almost 6% over the week as concerns around Iran and the possibility of tighter US sanctions reminded traders that supply risk was still very much part of the story. We also saw speculative positioning in the oil market become more constructive, with traders increasing their net long exposure. But by Thursday and Friday's trading session, the story became less straightforward. Iran's president was talking about ending the conflict, while at the same time, Washington was preparing even tougher sanctions. So the market was dealing with two very different possibilities: diplomatic progress on one side and tighter supply risk on the other. And you can see some of that hesitation developing around here. Because of the role $86 has played over the past 3 weeks, this becomes my key level going into the new week. It was a resistance, right? Buyers have now broken above it. Now the question is whether they can maintain control above it or whether price will eventually fall back through the level and the ascending trend line. Now, when we scale down to the 1 hour time frame, I want you to notice how price is behaving around this area, because this is where the setup begins to tell us more. During the later part of last week, price became confined between roughly 85.95 and 87.3, and that range tells us something. Despite the wider bullish structure, neither buyers nor sellers were able to take complete control heading into the weekend. Now look at the lower boundary of that range around 85.95. It sits almost directly around the ascending trend line. And remember, this entire area is also sitting around the $86 zone we identified on the 4 hours time frame. So around the same area, we have 3 things coming together: the lower boundary of the range, the ascending trend line, and our 4 hour key level. That is why I will be paying close attention to this confluence. If price action breaks down retest below this area, we would have lost the range supports, the ascending trend line, and the $86 key level almost at the same time. That will tell us that the character of this recent bullish move may be changing and selling pressure could begin to build again. But if buyers continue defending the structure and price eventually breaks and retests above 87.3, then we have a stronger evidence that buyers are still in control. And this week gives us enough reasons to watch both possibilities. Details of the new US sanctions on Iran are expected on Monday. Then on Wednesday, we have US crude inventories and fresh US inflation and growth data. So the market is going into the new week with both supply risk and economic expectations capable of influencing the price of oil. For me, the structure keeps it simple. Around the $86 zone, I am watching for who maintains the control. Above the structure, buyers still have the advantage. A confirmed breakdown through the confluence will tell us something has changed. Let's see how the week unfolds. Until we meet again, trade safely, manage your risk, and I'll see you again next week.